All right, guys, what's going on? This lesson is going to be quite entertaining and it just needs revisitation to emphasize the point of the importance of ranges. Okay, so one thing about this market is going to range. Okay, you can trust and believe that this market is going to create ranges, whether that's a monthly range or a daily range and a weekly or whatever the case may be, right? And those ranges translate into support and resistance or supply and demand zones. Now, however, the supply and demand zones manifest in either minor structure or major structure. So this is why I want to show you some setups that will get you to understand certain things and how it links to the failed higher highs and failed lower lows for us to get that confirmation. All right, guys. So I'm going to go to like a 4-hour time frame. And I'm also going to remove these session breaks so y'all can see things clearly. Okay. Now, one of the pairs that really give you a solid range is USD CAD. Now, notice how a lot of times price will create these major structures on a higher time frame because it's more persistent, and order blocks and market makers will set these order blocks up here just to set the tone for the range of these currencies. Remember, we are working with currencies. So currencies have to be at a set range of prices throughout a monthly time frame. Like, think about it. It's like gas prices. Sometimes you might see gas prices range from $2.60 to $2.70. And then at the end of the month, it falls back into like the ranges of $2.67, just to kind of fluctuate price and get buyers and sellers to make a decision. So in the same case is how you can see currencies do the same thing. So let's go ahead and go back in time a little bit. You can see on a daily time frame, in December 2020, August 2021, this was a range, right? This was the supply zone. This was the supply zone for USD CAD for the longest time, right? So all this range between 1.2941 to 1.2047 on a daily time frame shows you what the range has been for this currency pair from December 20th, 2020 to May 2021. That's how they're keeping the range between the fluctuation of prices for these currencies, because it works. It works with the economy, and when things are low, different, then they'll change it, keep it at a discounted rate to push the market up because there's higher demand for whichever one, right? So boom. Notice that this happened in like 6 months. This was a 6-month period where this is how they kept it. All right. So as we go down into like a 4-hour time frame, we can see that this same range from August 2021 was retested in September, right? But how did they do it? This is where things get real funny and interesting and redundant. How did they do it? At one point, price did reach this zone, this area. They failed to go higher than this. They started creating minor structure, lower highs, lower lows, right? But the major structure is right up there. So as you guys can tell, right here into the minor structure as price is fluctuating, boom, we see like this crazy impulsive buy, but really that is just the market maker's way of trying to take out early sellers. And most of the time we might have not seen it coming. And sometimes you notice that this type of behavior happens because of news, and they reset this joint, they reset the whole play. But here's one thing: no matter how prices created this impulsive buy, and we might consider it to be, oh, maybe this is a break of structure. It is a break of minor structure. But when price made it to the ceiling again to retest the supply, guess what? It did not break major structure. It didn't go above it, right? It did not close above with candles that are significant enough to break the ceiling. So when that kind of behavior happens, then we're still going to have to consider this move for what it is. It is a failed higher high. It's just a retest of the supply. Okay. And once they do that, guess what? Price continues back down eventually. And typically you'll notice that they will go looking for previous support to target and sweep, and the cycle continues all over again. So a quick piece of advice, that's why, like, even if you're swing trading, you got to learn to close some profits along the way, right? Let some partials run and whatnot, because they're still working with minor structure, even though they got somewhere that they need to go. You see all this minor structure, right? Look, price came in here. They swept to go retest the supply. Okay. But eventually, from the 20th of that September all the way down into that month, price is reaching a demand zone from July. It took about 23 days, but for the whole month, this was the range. You get it? That was the range. So all of this is the minor structure playing out, but the major structures are those big resistant areas or support areas that are keeping and setting the tone between those two ranges for the month or for the week. All right. So that's why it's important to understand the role of a higher time frame. And I'm not, guys, I'm not even gonna lie to you. It took me a while. I stayed in lower time frames because I like catching my 20s, 30s, and 40s and 50 pips. But it's because I didn't fully understand the role of what a major structure from a 4-hour daily time frame really represented. Okay. They're like those big bodyguards that is like, no, you can't go further past this point unless it's time for us to change the narrative. And based on supply and demand or based on economic happenings, then they will move the price at a higher area. Okay, so that's what the range is. And now fast forward, and this is not the first time UCAD has done this, right? You will see the difference when price wants to change range. How do they do that? I'll stick back around and I'll show you. So we can all agree that at a certain point, this was considered the resistance, okay? But from January in 2022, which is about last month, we saw price come from this area, swept, broke that small minor structure, pulled back, went higher, took out this resistance, took out this resistance. These are all minor structure zones, because we can see that price is aiming to buy higher. And at that point, supply zone that was here got violated. And you can see how the break of structure on a major zone got taken out with multiple strong candles. That's the official break of structure of a major structure, of a major area of resistance. So that means major shift is about to happen. So what happens next is a retracement. They leave this little pocket of liquidity. All right. Boom. They go after it, retest the demand, and then they go higher. Now, they're going to have to reach this point at that moment. And this is why I made sure to emphasize that this was the beginning of January. And that's what the supply was. That's where the range was. So now that price makes it here towards the end of January, they bounced off of it, pulled back, retraced, and they made it into this demand, which obviously was also a range, right? This demand was like a midpoint, if you will. It's the midpoint. I'm messing around with the colors here. Demand zone. Let's change this into a. All right. So as you can see, though, we can see that price did break this small structure or this minor structure within this demand zone. They bounced off of it, came back, retested it. And can you imagine you're thinking this is going to be a major breaker structure, but in order for it to pass the test, they're going to have to break above the monthly supply zone. And they failed. They failed and they started rejecting and rejecting and rejecting. So we know what happened here if you were trading NFP. We saw that from a good selling trend, price changed the character. They pushed up 115 pips. Congrats to you if you caught it, but that doesn't mean that price broke major structure. It didn't. It broke minor structure. And the only way we would say, oh yeah, this is breaking major structure, if they continued or if they are going to continue, because after they went all the way up here, they failed the first time, but let's see how they come in next time. If they pushing and coming right back to the demand here, they might be gathering more strength to go higher. And now the next target is going to be above here because while they're doing all of this, there's liquidity being accumulated right up here in the form of stop losses and pending orders. So when they go and grab it, they might pull back a little bit and then continue later on to find the next area of resistance or the supply zone. Maybe they might get to this imbalanced candle and pull back. Who knows? But that is the importance of understanding the ranges and how major and minor structure plays a role into how this market moves. I hope you guys are catching a light bulb aha moment, because once you start to understand that, you might get, you might get knocked off your pivot because sometimes we just don't see it coming and you pulling up at a time where you're sleepy or, you're not sure what really went on here. But that's why it's important to understand your ranges. Okay. It's a currency pair. That means currencies are fluctuating in price for the month. So this is why, like, when I saw that price did this aggressive buy to the upside, doing all this tough talk, but really it didn't amount to much afterwards. So guess what? Boom, they bounced off of it. And then by following into the next week, you can see price, all it had to do in order to continue selling was they knocked out a minor structure. All right, this was like Asia, not Asia, but New York mid. They just went and grabbed it, took it out, stopped that liquidity real quick, and then they just continued. And you see the break and retest, break and retest, break and retest, break and retest, boom. And then we are now in New York, and price came down. So all of this minor structure, they bounced off like a major wall and they couldn't break it. So this is looking like a nice M, which could be heading down to the downside. So there's two scenarios. If they can't break below, then they're going to stay right in here, aiming to see if they could go higher. If they can't break, if they do break, then they're going to be heading down into this imbalance candle. Okay, I believe we are making sense of this, but let me find another example just to show you how things are played out. So boom, here's the range. We can see that this range is strong because it was tested in November, left the pocket of liquidity. They went and found it. They took a while towards the end of December into January. And finally, they broke structure right here. Step one, pull back. Then they broke out that the second time and they kept the range, pulled back in here, made good use of this pocket, bounced off of it, broke structure again, boom, started ranging, pushed higher, boom, retraced back into the man, left the pocket of the Hoodie right, and then boom, big move. That's a break of structure. However, after break of structure, even after break of structure, price must retrace. So that's the retracement. So now we got to see what's going on, how they're going to keep this range. And then when it's time, they're going to go up again. So that's how, with this understanding, you get to make a decision. Like, let's say you took this buy, caught it, but now that it made it there, yes, you still swing it, but look, you got to know when to close out your profit from a swing as well. If not, you're going to give the whole pips right back. That's not the point here. There's a benefit in swing trading and holding on to the trade, but it doesn't mean you have to hold it forever. You can swing trade and hold it up until the next resistance, the next demand zone or something, right? But once it gets there, you have to know how to get out. You have to know why you're getting out most of your positions. If you're holding long term, that's on you. But this is the factor that major and minor structures play. Let's show you another example. Here's GBP/JPY. You go to a 4-hour time frame, you can see that price from October 2021 had this order block right here. Then from here, they boom, retraced, broke structure, retraced, and they went all the way down into here in December, right? From October to December. So now price makes it to this major structure demand zone at the bottom, which we can see price has been reacting off of it. And then I kept this for a reason, because this was a supply zone, but they broke it. Major structure taken out, right? And how do you tell it's a major structure? Like on the higher time frame, you're going to see a zone that's been ranging for a while gets violated, and then they retrace back, and then boom, we got a major push. That's major, right? And then we can see after they did that, they found October's supply zone, which they made it to, and they failed to break higher. So at this point now, we got to return back to discounted price points, discounted zones. And now that price has returned to a demand in January, which was also the start of late December. So now that they did that, you can see them pushing and pushing and pushing. They made it to this supply zone on a major structure, the 4-hour. All this is playing into the price action until they get here. And if they fail to break it here, then what are we going to have to do? We're going to have to go to a smaller time frame just to see how things are playing out, so you can see about getting your entry and catching your pips. All right, in this case, this is how they played it. You can see on the M15, price gave us a range for Asia so that they can sweep. They took it out. As soon as they took out, their objective was done. Their objective was just to sweep Asia and then fall. So you don't have to be waiting for the price to get all the way over here and such, but wait and see what type of range the Asia session is giving you and see if that gets taken out. Or sometimes the middle of New York or the high of New York gets taken out, and that's when you know it's time for you to take your reversal counter trade. All right, so this is what I really wanted to break down. I know many of us have made these mistakes for so long and not understand like why price does what it does. But believe me, once it starts to make sense, you're like, oh, okay, I see. This is major structure, because you can see it getting retested from months and months at a time. In most occasions, they don't break it. They just bounce off of it and fall back until there's like major push past that structure. Then we know price broke major structure on a higher time frame. And then that's when you can tell the narrative has indeed changed. Same thing with US 30 as well. You can find it everywhere. And that's why, like, when you're looking at a 1 hour and you can still see the major structure they can't get past it, that's when you know, all right, it's time for us to see and follow up, see if we can find some really good entries based off of some sweeps and retests and retracements or whatever you want to look out for these confirmations. Because once the price starts getting weak, then that's when we take action. So I hope this video is very helpful and eye-opening. I'll see you next time. Okay. Now, here's some funny memes that I did find to kind of explain how I see it in my eyes, right? This, I don't know if you guys remember this cartoon, Between the Lines. This is how I depict the market when they failing to break higher, right? They get to these zones and they was climbing the mountain very quickly, right? Pushing, 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 pushing. And they get here and it's like a can't hold on much longer. So obviously at that point, if they can't hold on, right, and they're failing to go higher than this, then you get what we see here with the Looney Tunes, right? Grand Canyon fall and prices just falling off the cliff. Okay, so that's how I imagine it every time I see these type of setups, and I'm like, bruh, well, you made it to almost the peak of the mountain, but you lost steam, you lost your stamina, or you lost your footing, or tried to hold on to that one piece of rock and it slips, and boom, there you go, falling off a cliff back to the downside. Okay, guys, I think that pretty much covers it. I'll see you next time. Peace, love, and blessings.